Hello, everyone, and welcome back to another episode. I'm Kavita Agrawal, and we are here to talk about the market as it has been this week. So, this was a truncated week because of Labour's Day. Today, we'll talk about what Nifty's done, what it's expected to do. We'll also discuss the intersector charts and each sectoral index to see where the momentum is headed. So, without any further delay, let's move towards the charts and get started with the discussion. So now you're looking at the Nifty chart on my screen, and let's start off as always with the highest time frame, which is the weekly time frame. So here you can see that, like I said, once we cross above the resistance at 23,900, I had been mentioning that the move towards 24,800 was going to be painful. Slow and painful move in the stock market helps neither bearish participants nor bullish participants because it's constantly whipsawing in both the directions. So if we come one time frame lower to the daily time frame, you can see here the price has been pretty much in a consolidation zone ever since it broke out above 23,900. And in that consolidation zone, every time it comes back to 23,900, it again gives us a bit of a move on the upside. The last two trading days before today were pretty much like dojis. Today we did see a temporary breakout, but it did not last. So this is what a painful, slow and painful move towards a resistance looks like. If we do a zoom out, we can see the RSI is trying its best to overcome the level of 60. That is, the bulls are trying but not succeeding to build a momentum, a positive momentum, or sustain a positive momentum in the market. So, is this bearish? No, it's just not outright bullish right now. Coming to the 75-minute time frame, this is where I start to get a little bit concerned because there is a negative divergence that has emerged on the charts. This negative divergence indicates that the momentum is shifting from bullish to bearish. But how strong is that shift will only be known when a key support or resistance zone gets breached. Right now, we are staring at 24,800 as a key resistance and 23,900 as the key support. So, we need the market to make a conclusive move beyond either of the levels to know where it is headed for good. I can see a lot of you are new here, so I'm sharing in the comments the link to my Telegram channel. If you want to connect with me or get my recommendations on the stock market, then just join this Telegram channel, Trade with Kavita. Before we move on to the sectors, I want to show you my Telegram channel. This is the channel, and just today I've shared a long-term recommendation. You can either participate in this long-term recommendation directly, or you can enroll for the long-term recommendation program using this code and avail a 25% discount at checkout. Right? I come live 2 to 3 times a week because of my young daughter. I have a 5-month-old daughter right now. So because of that, I try to come live thrice a week. Sometimes I'm able to come twice, sometimes one, sometimes none. Most of the time I try to come live 2 to 3 times. So if you want to know when I'm gonna come live, my Telegram channel is the best place to know about that. Also, I'm doing 100 days stock analysis series right now. We've done 15 stocks so far. And in this series, I want to show you, by way of technical analysis, how to make swing trading decisions and not just buy decisions. I'm also trying to teach you or share with you how to make avoid decisions. I realize that because in the stock market, YouTube, space, there's a lot of videos which shows you how to make a buy decision. It's very easy to forego the sophisticated skill of saying no to a stock chart. Because if you're going to look for a pink elephant, that is what you're going to see. So you want to make sure that you're looking at the charts objectively, and that is what we cover in this 100 days series. So Deepak is asking how to identify undervalued stocks. So Deepak, the best way to identify undervalued stocks in the market is by focusing on price action. I know this might sound surprising to some of the participants, but you have to understand that valuation is only clear in hindsight. It is very arbitrary. It's a very arbitrary metric, no matter how much information you've collected or and processed to come up with a value. So what I prefer to do is I prefer to study pattern cycles and wait for a key pattern cycle reversal on a long time frame and then make the decision. So right now on my Telegram channel, if you see this stock which I have given a long term recommendation in this stock, if you see this, the target is 101% against a stop loss of 20%, giving us a risk reward ratio of 5, right? So this stock, the name of which can be explored when you go to the link in my Telegram channel, this stock is right now coming out of a major correction, and it has confirmed an uptrend. That is why it has made it to the long term recommendation plan, right? Of course, you have to make sure that the business model of the company is promising, that the company's management is strong, and there are tailwinds, not headwinds, for the sector in which the company operates. As long as all of these things align, this technical and fundamental factors that you need to look at are pretty basic to identify multi-bagger winners in the market, right? So you can either do it yourself or you can take help of a research analyst who is registered with SEBI like myself to make your life easier. Okay, now let's move forward with the sector analysis. So we will pull out the watch list for sectors. So let's go into the list and search indices. Oh, okay, no, not that. There we go. So we will now change the date from April 18th, because that is the last time we did this analysis, to May 2. And this also we will change from April 18th to May 2. Okay. And we will first assess whether the sectors which we thought were bullish are bullish or not. So, starting with the CNX Media, we'll switch to the daily time frame. So I can see the CNX Media is making higher lows here, and also respected the level of 40. So I think there is a little bit more upside left, right? So it turned bearish at this point, and since then continues to remain bearish. I think it can give another small rally to retest the 100 EMA. Even though I identified the CNX Media as bullish 2 weeks ago, to be honest, I myself have not taken any trades in the sector, because when I went down to the stock specific charts, they all looked pretty bearish and short term bullish. So because the larger time frame was showing bearishness, it did not make sense for me to risk my capital in the short term with positions on the basis of the 75-minute time frame. So I am going to let CNX Media remain here, because I know there are a lot of daredevils in the audience who will make short term positions for the long side, even if the relatively larger trades charts are not looking very bullish. Personally, I like to play it very safe. So when I make a position in a stock, I look for something called eclipsing, which means I will look for alignment in different time frames. The weekly time frame, the daily time frame, and the 75-minute time frame for me should all align and give me the same story of bullishness for me to risk my capital in the market. And while doing that, it should also give a risk reward ratio of minimum 3 to make it worth the risk. Moving on, FMCG. So FMCG has broken above the level of 60 very recently, establishing the bull range that is turning bullish again. So if the market does take a resistance at 24,800 and decline again, then the FMCG sector I think will offer relatively attractive opportunities for investment. So I have my eyes on some stocks from the FMCG sector where I will make a position if they do reach a support or if the overall market turns bearish and the opportunity there continues to remain attractive. So FMCG looks good. It has overcome the level of 60. It has overcome the 250 EMA. The 20 and the 100 EMA is also giving a crossover. So I think, okay, even the 75-minute time frame, if you see, has turned bullish after a pretty long time here. So I think FMCG sector is definitely looking very bullish to me. Wow, that came out of nowhere. Excuse me. Um, PSU Bank. So for PSU Bank, I think there is a lot of positive activity because this is in the bull range. This correction is pretty healthy because as you can see, it is taking strong support at this trend line. If we go down to if we go up to the daily time frame here, it has created a very tiny breach above the level of 60, which makes me hopeful. And this follows a positive divergence on the RSI 25 period. All right. So I think the PSU Bank continues to look pretty attractive. Consumption sector is also looking attractive because here also the RSI has gone overbought, which indicates strong momentum. The 250 EMA has also been breached. The 75-minute time frame RSI is also suggesting a very strong build-up, a very strong move uh, above the level of 70, 60, 70, and it's also not spending as much time below the level of 40, which is positive. So I think the consumption sector is also good. So the stocks in the sectors subject to stock specific analysis also become subject to potential long positions. Let's move to infra. So on infra, there was something building up, but I see a negative divergence on the 75-minute time frame. So I don't think it's looking very bullish right now. So I'm going to move it to potential away from the bullish sector or the segment. Next, we will move to the realty sector. On the realty sector, I can see a positive divergence on the daily time frame indicating potential reversal in prices. The sector turned negative back in January 25, in my opinion, and it is now trying to revert. But as you can see, the 100 EMA here is acting as a resistance. So I would wait for the stock to retest and establish a higher low, which means that the previous correction that the stock established, it still went and created a lower low. Here it has created a higher high for now by breaking above this level, but it definitely looks primed for a correction because 75-minute is showing negative divergence. RSI EMA 100 is giving resistance. So I will wait for a correction here and then maybe assess. So I'm going to move reality away from the bullish segment as well. And let's see what do we have. Waiting for overbought in daily, higher high above this. Okay, so this criteria that we noted on the April 18th has been achieved. We have established a higher high. We have gone above the resistance, and on the daily time frame, we've also established a bullish zone. So I think the oil and gas sector is starting to look quite positive now. Moving on, energy sector, positive divergence, rally, and I would say the oil and gas looks more positive, but the energy sector is also doing pretty well. It has broken above the previous high. It has broken above the 100 EMA. Now it is heading towards this 250 EMA line. Yeah, this is a 250 EMA line, and trying to take it might take resistance there, but it is definitely looking bullish. So energy sector continues to be bullish as well. What about the pharma sector? We did note there was a positive divergence. We've seen rally, a higher high has been established, but we're still not overbought. So I'm going to set an alert here because I want to know if the pharma sector goes overbought. Because honestly, for swing trading, the pharma sector gives very good candidates, and I personally trade the pharma sector from a short term swing trade perspective very frequently and get good returns there. So I think the pharma sector continues to have potential. We'll continue to monitor that. What about the healthcare sector? The healthcare sector is also the healthcare sector is also looking potentially positive or bullish. I see it has made a shift to the bull range and established a higher high in price. So while the pharma sector will continue to be in potential, I am ready to move the healthcare sector from potential to bullish. Let's take a look at the metal sector next. I think the metal sector continues to look quite bearish because there is this resistance coming from the cluster of EMAs. All 20, 100, and 250 EMA are showing resistance for the metal sector index. So we will avoid making um, so you will avoid making positions. So I just got a comment from Ayush who says pharma sector for trading is pretty bad. So Ayush, I think what you probably not done is you've not studied the past price action. When you study the past price action of the pharma sector and so stocks in the pharma sector, you will realize that they are very good swing movers and they give pretty good indications on the RSI 25 period. So for me, stocks like Abbott, Sun Pharma, Divis Lab, Oro Pharma, they all give, and even Glenmark, give very good movements and are frequently traded and profited off of. So if you want to trade pharma stocks better, I would suggest you join my short-term portfolio recommendation plan, and let's work together on helping you trade better in the pharma sector. Next, let's move to the finance sector chart. And here I can see the finance sector is in a very strong underlying bull trend, and all time frames look pretty bullish. So we'll move the CNX Finance to the bullish one. The Bank Nifty index has shown a positive divergence given very strong rally. Right now is taking some correction. The 75-minute time frame was very bullish. So I think I will be looking at the private banking sector as well for opportunity now. Now, you might have noticed that the finance and the bank nifty were not in the bullish segment earlier. The reason they were not in the bullish segment was because I could identify they had rallied very strongly up to this point, and I wanted to wait for some consolidation or correction here. Now, because since the last time we discussed, that is 18th April, we see it has not rallied significantly. It has been in a downward or sideways movement. I expect that um, I expect that we can see some recovery in the or some continuation of bullish sentiments in the bank nifty or the private banking sector and the finance sector. So now I am moving them from the neutral to bullish segment. Let's take a look at IT. IT continues to look pretty bearish. It's still forming lower high, lower low. It's below all key EMAs. It's still breaking below the level of 30 and not gone overbought even on the smallest time frame that we follow. That is the 75-minute time frame. So we will continue to avoid IT sector for now. Let's look at PSE. So the PSE sector did give us a breakout above the 250 EMA, but um, Does that mean it is ready to rally? Well, it is still taking resistance here at the level of 60 on the daily time frame, the RSI is. It did give a positive divergence. Let's take a look at the 75-minute time frame. So the 75-minute time frame did turn bullish. So there is a chance that the daily time frame might come around. So I am going to move the PSE sector to potential. And this is a big deal, guys, because the PSE sector is very cyclical in nature. And this sector topped out back in August of 24. And now, after almost 9 months, it seems to be giving a reversal. Now, when the PSE sector comes out of a correction, it tends to give pretty extended rallies. So, if you have been waiting to invest in PSE stocks, then you might want to start looking out for opportunities. In fact, you might also want to keep an eye on my Telegram channel because I will be giving recommendations there from this sector. Now, let's look at the last sector chart of the day, that is the auto sector. And if you have questions for me, I would suggest you start posting your questions in the comments now, because once I'm done discussing the auto sector, I will try to answer your questions related to the stock market. For those who will ask specific stock queries, I will look at the stocks that you ask for after the session. And if I see any strong potential in those stocks, I will be mentioning them in my stock analysis. I will be doing a stock analysis series on them, on your stock query. But if you have a general question about the stock market, feel free to ask it in the question in the comments right now, and I will answer. So I can see one stock name already popped up, that is M&M. Thank you so much. Let's conclude with this session by discussing auto. I can see the 250 EMA continues to act as resistance for the auto sector. Auto sector turned bearish, clearly bearish back in October 24. The same time, it also broke below this 100 EMA. And now I see the 100 EMA and the 250 EMA together acting as strong resistance. The 75-minute time frame has also shown a negative divergence. It's been going oversold. So I think the auto sector continues to remain pretty bearish, and we will continue to avoid the sector. Let's now okay, so this was it. Let's do some Q&A. If there is any question related to the market, I'm happy to answer that for you. Let's scroll up on all the comments. Okay, so Neeraj did have a question. He wanted to know what the Nifty looks like on the weekly chart. So we did discuss that right at the beginning. So I'll just take a look at the weekly chart for you again and tell you what it looks like. So Nifty on the weekly time frame looks like it is coming out of a correction in a bull trend, because it has been sustaining above the level of 40 and on rallies breaking way above the level of 60 and 70. I think the underlying trend continues to remain super bullish on Nifty. Over here, the level of 24,800 is acting as a strong resistance. And right now, we need to see the market break beyond either the resistance at 24,800 or the support at 23,900 to determine the next direction. But since the resistance at 23,900 has been reached, my belief has been that the move to 24,800 is going to be slow and painful. And that is exactly what we are experiencing in the market. So, right now, from an action perspective, it is best to remain patient and wait for high quality trade setups to emerge before you take any action. Remember, 95% of your market time should be spent in monitoring, only 5% should be spent in trading. And guys, if you're interested in learning swing trading from me, then you should explore my advanced swing trade training program, on which I am currently offering a Mother's Day special 50% discount. And if you know a woman out there who has a background in the stock market, who knows the basics, and would like to do something with her time, if she is looking to get back into work in an environment which is flexible, which can be demanding, but respects her time and is very flexible, then do refer her to my program and tell her I'm offering a special 50% discount with the code Mother's Day on my advanced swing trade training program. So if you are interested in exploring this, then just go over to my Telegram channel and check out this message. I'm going to copy the link to this specific message for you. Where is the copy link button on this? There was a time when we could copy specific message links. Oh, there you go. Copy message link. Okay. So what I'm going to do is I'm going to share this link, Mother's Day discount, in the comments for you to send it forward to any woman out there who might be interested in learning swing trading and, taking back her financial independence eventually. All right, so there is a question for a sector. Anjor is asking for the analysis of mid cap 150. So let's take out the mid cap 150 index. Okay. Very strong underlying momentum here. And this is the trend line. And as you can see, there is a very strong upward channel, and the support trend line has just been tested. The 250 EMA has been broken above. The weekly time frame has just turned up from the support of level 40 on RSI. I think the mid cap 150 sector index is looking extremely, extremely bullish. In fact, even on the daily time frame, there is a positive divergence. I would, however, exercise a little bit of caution and patience here and wait for the level of 60 to get reached on the daily time frames RSI before I start making aggressive positions in the mid cap sector. And just as a note of caution, if you're going to trade stocks, make sure you're using your stop losses religiously. Majority success in the market comes from minimizing your losses. As long as you're minimizing your losses, your profits will take care of themselves. Just stay disciplined and show some integrity. All right, guys. So, with that, we come to the end of this session. Thank you so much for joining in. I will see you again on Monday with the next stock analysis. With the next stock for the stock analysis series. If you want to know which stock I will be analyzing, just join my Telegram channel so you will have an advance heads up. And if it's a stock of your interest, make sure that you join it. I will see you on Monday. Have a great weekend ahead. Thank you for joining. Namaste.